Hello and welcome to this edition of IG Trading the Markets. Today we're speaking about the cannabis journey from crop to stock with Brett Hundley from Seaport Global.
There are certain companies that have come to market quickly. They are dominating the global space at present, but that doesn't mean that these companies will be dominating the space or maybe even be around in the future.
And Neil Mahapatra, MD at Kingsley Capital.
The ones that will be the leaders of the future are the ones that have not necessarily invested in cultivation, but focused on intellectual property, science, and brands.
To find out more, listen to our podcast series, IG Trading the Markets. Hello and welcome to this latest episode of IG Trading the Markets. We're here to look at the cannabis supply chain to better understand process from crop to stock. Joining me on the podcast today is Brett Hundley, Equity Research Analyst at Seaport Global in Richmond, Virginia. And in the studio with me here is Neil Mahapatra, Managing Director at Kingsley Capital Partners. Thank you so much indeed, both of you, for joining me. Let's start at the beginning, if we can, and go to you first of all, if we can, Neil. Where does cannabis begin its life as an agricultural product? I mean, around the world, what are we looking at? Where around the world globally is the most stock grown?
It's a difficult question to answer because it's not necessarily driven by the ideal climatic conditions or those types of drivers. At the moment, the main driver for where cannabis is grown is really driven by legislation, and that in and of itself is a very complex web of regulation to define. So, for example, if we take the US, in the US, legislation for cannabis cultivation has really been passed on a state-by-state basis, and that has led to a patchwork of states and a patchwork of legislation that is all different from state to state. But what that's effectively meant is that cannabis is grown really to cater to demand, which is often correlated to the size of the population in each state. And so you have a interesting dynamic where, for example, Massachusetts, which is a state that has gone recreational, Massachusetts grows and cultivates a significant amount of cannabis. However, one can imagine a time in the future where were cannabis to be legislated for on a federal level, one might be able to grow cannabis more cost effectively, for Massachusetts, but in California, in the Golden Triangle of California, for example. The unit economics are arguably better there, but you can't do it at the moment because legislation prevents you from crossing state borders. So at the moment, difficult to answer, but driven by legislation.
Brett Hundley, any comment on this? I mean, you are in the States there. How do you see the spread of the agricultural side of it? What is the take-up at the moment with farmers perhaps maybe wanting to get into this area?
Yeah, I agree with Neil. It's challenging to measure where production is today and how much production is in place. So in Canada, we have a pretty good read on the numbers based upon the figures that Canada puts out. We estimate that industry there is producing close to 2 to 3 million kilograms annually now on a run rate, so around 2 to 3 tons. 2 to 3,000 tons. In the U.S., the numbers are much harder to come by. It will be at multiples of Canada, but not as much as you would think. So the U.S. market is worth around $10 billion today, by our estimate. Canada is worth close to $1 billion today. So the U.S. should be at multiples, but the U.S. is not overproducing like Canada is. Relative to that, 3 million kilogram number that we think they're producing at, we estimate that Canada is only demanding about 1 million kilograms today. So Canada is very much overproducing. The U.S. is in much more of an equilibrium today, supply relative to demand. California is the largest state in the U.S. They make up probably 40 to 50% of U.S. production and demand. And as Neil noted, you can't really cross state borders in the U.S. today, so everything has to be done on a state-by-state basis. Adding to the complexity is in states like Oregon and Washington State, a lot of that production is actually grown outdoors. So 30, 40, 50% of the production in Oregon and Washington is actually grown outdoors. Some of this production filters into the illicit market around the country. So
are there?
Hard to get it.
So if I can interrupt you there, are there specialised farming techniques then to maximise the quantity and quality of the crop grown? Is it done best outside or inside, or does it depend on where you are in terms of north or south, or in terms of the globe?
Sure. Yeah, we could speak for hours on that. The answer is it really depends. Today, present day, it's much better to grow indoors. Marijuana is not like field corn or wheat. You can't just grow it virtually anywhere. It depends on wind, rainfall, pests, etc. And so today, with the industry being as nascent as it is, marijuana is best grown indoors in order to control for all those factors. But growers, cultivators are getting better at growing outdoors today. They're digging ditches to protect from wind and other elements, and then security alone, just given the value of the crop, that's again why it's better to grow indoors today.
Neil, let's bring you back in and ask you the question about whether or not cannabis could eventually be traded on its own as a soft commodity. It's not yet commoditized in that respect. Do you see that something that could happen?
I do, but in quite some time. So just to put this into sort of historical context, and Brett may disagree, but I think where we are in the cannabis market is kind of the equivalent of people bootlegging moonshine into the US for the alcohol market. Look at where the alcohol market is now, and it's much more stable, much more predictable, more commoditized. So in time, yes, but a few things need to happen. So to Brett's point on sort of growing outdoor versus indoor, that's entirely correct. It also depends on the end market. So if you are in a state or a country that really is medical and driven by medical, and this is particularly outside of the US, the cultivation needs to be done under GMP conditions. Whilst if you're cultivating for more processed products, or if for a more recreational market, you can cultivate outside. Those types of dynamics need to become much more homogenous across the world before cannabis as a commodity can be traded, I think.
Let's work on the next process here. Presumably it's the harvest that has to be sent for lab testing. Brett, how complicated does this get in order for the cannabis to comply with local regulations in different jurisdictions?
It's fairly complicated. I know here in the U.S., each state differs on what can be included, what elements can be included in that marijuana, the level of THC that might be included in the flower, and so it really does get complicated in the U.S. on a state-by-state basis, and then as well. Here in the U.S., we do have specific states where we're playing catch-up on the testing and the lab side of things, and so supply has grown quickly. The testing facilities and the laboratories are playing catch-up, and so there's a little bit of a bottleneck in between the two. You're also seeing that in certain provinces in Canada as well. So it very much differs on a state-by-state or a province-by-province basis.
Neil, let's move on and take a look at where we are in terms of some of the funds and where they're pointed out there in terms of investment potential. There's a lot of compliance restrictions, of course, when it comes to investing in cannabis. Are there other companies that provide ancillary services that can be invested in instead, for example, in testing process or infrastructure or lighting or some other area that is not regulated, that is supporting the cannabis industry, that could be a good opportunity for investors to look at putting money in?
So absolutely there are. There is a whole ancillary industry comprising all of those sectors and segments that you've just described. And there's a lot of funds that do invest specifically and only in the ancillary market. I mean, one that springs to mind is Cultivation Capital, which is a West Coast based fund, and they invest purely in ancillary. They've invested in one of our companies, which just does biotech research. And so the answer is yes. Investors find it more palatable, but I also tend to think that the reward is probably smaller than if you were to take a bit more risk and invest in kind of the primary market.
Brett, as an equity research analyst, are you in agreement with that? Do you find there's a lot of opportunities outside of the product itself to invest in, but are those investment potentials slightly less in terms of the opportunity?
Yes, I think Neil is spot on here. When I talk to the institutional investor set here in the States, they are, for those that are able, they are most focused on opportunities touching the plant, right? They're most focused on opportunities that deal with THC, produce it, and sell it, because they believe that that's where the long-term alpha is. That's where the long-term return opportunities are. However, there is a large subset of the investor base here that is not yet able to invest in THC, is not yet able to invest in companies that touch the plant. And so for them, they are able to play in these ancillary markets. A company here in the U.S. that's growing into Canada is Kushco. Kushco Holdings sells packaging, papers, gases for processing, et cetera. And they have a lot more of an investor base or a lot more diversity within their investor base relative to a plant-touching company that is only able to cater to certain investors.
Okay, well, let's pick up on that point and talk about the finished product and the processing part of this. That, of course, is the next in the supply chain to talk about. There are so many different products on the market now. What are the most popular products, Brett, and how complicated is this part of the supply chain process?
Sure. Well, we're about to open up a can of worms here. So, in the States, and I assume in other areas. Well, maybe I shouldn't make that assumption, but in the States, by far, the most popular product is vapes, vape pens, e-cigarettes, whatever you want to call them. Yeah. And the reason that we're opening up a can of worms is, of course, because of all the illnesses that have been roiling the U.S. market for the past few months. So it is a major headline here in the States. It's something that regulators need to figure out. But the consumer gravitates towards vape pens because of their convenience. People enjoy smoking products, and so they want these items, but they also want them to be relatively healthy, that they're not going to, kill someone. So that is something that regulators need to figure out. But vape pens right now, today, are about 30, 40, 50% of the products market, depending on where you go. It is not necessarily hard to make these products. The hardware themselves can come from many low-cost countries around the world. You can import the hardware, the technology, the formulation, that understanding is there from many food scientists. And so these products can be put together relatively on the cheap, and there's some bells and whistles that can be added that the consumer really enjoys. Like I said, the biggest issue now is figuring out what's leading to these illnesses and then properly regulating them.
Yeah, Neil, when it comes to storing, warehousing and setting aside stock for purchase, is this a product on the whole that has a short shelf life, or can we look at opportunities to store this in the longer term and look at companies that can provide opportunities for stocking supply along the chain?
So I think stocking the natural flower does have a finite period. But on the other hand, once you've turned it into more of a processed product, and you've mixed it with a substrate, you've extracted it into a series of cannabinoid solutions or a whole plant solution, then that can be stored. And which I think sort of makes it very interesting. One of the issues that will help storage and other aspects of the market is the issues associated with dosing. One of the problems that the market is trying to crack, which to Brett's point is why people I think find vapes, particularly disposable vapes, so attractive, is that 1 unit of cannabis, let's say in an edible, in a gummy, needs to have exactly the same effect as the next units of cannabis. Mm-hmm. That's not the case at the moment. And as soon as the industry has figured out how to ensure the right sort of pharmacokinetic dosing on each unit, then I think storage and finding the right medium in which you can store cannabis becomes a lot easier as well.
What about the branding of it, Neil? Where do we stand with that? I mean, do retailers tend to buy white-labelled cannabis products from a general sort of supplier, package it as their own and sell it on as their own branded products, or is there a central branding? Will we become familiar with some big global brands that start to emerge?
Some do. So I think there's different channels. There's some that buy cannabis or extract on a wholesale basis and then will apply their own brand. There's some that are vertically integrated and sort of do it themselves. In terms of the quality of the brands that have come out, I would argue we're still in quite a nascent period for the branding market. There's a few celebrity brands that have come out, Marley, Willie Nelson, for example, but I'm not sure how much they've taken off amongst the consumer. We at Equinox, we have one which is based upon the life of Howard Marks, Mr. Nice, right. Who was a famous cannabis smuggler, read a book, and as of today, actually, the announcement's just gone out. We will be selling our branded products, not flour, and certainly not THC, given it's in the UK, but we'll be selling it in Selfridges. And I think one of the reasons Selfridges was so happy to stock our brand is because it did have genuine cannabis heritage driven from the Mr. Nice story, and it's a great story. But in general, I think there's huge upside for brands, but finding the right brand that captures consumers' affinity is difficult.
Brett, let's talk a little bit about where the bottlenecks are across the supply chain. Are you witnessing any? As an analyst, you must look in critical detail about what's going on and how fast some of the products get through to the end user. Are there any bottlenecks that we should be aware of? Can we look at an area where perhaps we could identify such an area that is coming up at the moment?
Sure. I mean, broadly, the easy answer is that the bottlenecks that are in place today, predominantly across North America at least, are all politically motivated. They're all regulatory related. And so if you isolate Canada, for instance, the bottlenecks that have been created in Canada are largely at the trade level between wholesalers and retailers. So Canada has more than enough product available, but there just aren't enough stores on the ground to sell that product. And the primary reason for that is that the local governments in Ontario and Quebec, which are the two largest provinces in Canada, they have not moved quickly enough to open up stores. Consumers literally don't have many options for accessing all of this cannabis that's coming out of the industry. In the U.S., the industry has done a better job of matching supply to demand, but given that it's a patchwork network of opportunities in the U.S., if we go back to Massachusetts as an example, the product is there. Even the store set is there, one could argue, but the store set that is in Massachusetts is largely labeled medical today, and the local government in Massachusetts has been slow to flip those stores from medical to recreational. It's been slow to issue the licenses that allow those medical stores to flip to recreational product. And so that's created a little bit of a bottleneck that's backing up through the system as well.
Neil, let me put the same question to you as someone that is commercially exposed to the end market. You're talking there a little bit about your relationship now you've established with Selfridges. Do you see bottlenecks appearing? Do you find it difficult to get the product you need in order to supply it through to the end user, where the demand's coming from?
It depends on the market. It depends on the jurisdiction. In the UK, it's only a medical market, and for anything that's more retail focused, it needs to be CBD only and associated products. Clothing associated with the brand and things like that. Brett's absolutely right. The biggest constraint on all of this is legislation and political agendas. And until that becomes more unified across the world, there will always be bottlenecks. One of the other things that, particularly in medical markets, that needs to homogenize is the indications that cannabis can be prescribed for. So some markets, larger markets, pain is an accepted indication for which doctors and healthcare professionals can prescribe cannabis for, but others don't include pain, which really constrains the market quite considerably. Only PTSD, cancer, and really quite serious ailments like that. And until all of that eases, there will always be bottlenecks, I think, and constraints.
Brett, the final question to you as an analyst: are there any companies that are dominating the scene so far, right the way from crop to stock?
To answer that question, I would definitely point towards Canada. The Canadian LPs, licensed producers, are the ones that have had a little bit of a head start here. They are the ones that not only have been trying to dominate Canada, of course, but they also want to dominate the global market. So you have companies like Aurora, Canopy, Tilray. Those companies have moved to put production down not only in Canada, but in European markets. So you've seen a number of those entities start to build large cultivation facilities in Denmark, Portugal. And then those Canadian LPs have also moved to establish hemp production and processing in the United States, where hemp became legal late last year. One of those LPs, Canopy, has even gone so far to set up a very interesting agreement with a U.S. firm, Acreage Holdings, that allows Canopy to buy acreage when, in fact, the U.S. federal government legalizes marijuana and removes it from the Controlled Substances Act. So those three companies are the ones that have moved quickly to establish operations around the world. They are the biggest in the world at this time, but it will be very interesting to watch how things proceed going forward, because as we've been talking about, those companies have put a lot of production capacity down around the world, but government constraints are creating bottlenecks, and there could be a situation where those companies built too quickly, and so that doesn't necessarily mean that those companies will be around in the future to take advantage of what we expect will be a very large cannabis market ahead.
Neil, you were nodding your head during that.
I totally agree. I think those are the biggest players in the market right now, but there is no guarantee that they're going to be the biggest players in the future. And, there's several reasons. One of the first is, as Brett says, they have invested a lot in cultivation. But if you look at what happened to the tobacco industry, companies such as Imperial and other tobacco companies don't own their cultivation. They offtake from farmers, and then they slice and dice into brands and add other things on a scientific basis. And so for companies that have deployed a lot into cultivation, one has to ask the question, is that an efficient use of capital? The second thing I would say is, there's been a massive correction in the cannabis markets quite recently over the past few months, driven, I would say, from poor management, and that's really been because and companies have just not followed regulation. There've been some stories of companies finding secret grow rooms, or the regulator finding secret grow rooms in Canadian LPs, and all of that means that there's a professionalization due in the cannabis markets. Canopy is the biggest. Canopy replaced its founder and CEO a few months ago. And so all of that has to play out. And this isn't something that's going to happen over the next few months or even a year. That's a 5 to 10 year play. I think there will be some new big players on the market.
Okay, looking forward to how things develop. Gentlemen, thanks indeed for joining us. That's it for this episode of IG Trading the Markets. We've been speaking there to Brett Hundley, Equity Research Analyst at Seaport Global in Richmond, Virginia, and Neil Mahapatra, Managing Director at Kingsley Capital Partners in London. Remember to subscribe to our podcast or learn more about investing in cannabis.